ArcelorMittal South Africa reported a headline loss of 460 million rand against a headline profit of 473 million rand in the previous quarter. The company posted a net loss of 462 million rand for 3 months to the end of September as operating conditions in the steel industry deteriorated markedly. But the company does say that the next 3 months are set to look far better. Gerbrand, ArcelorMittal, I mean, we know it's a company that has been viewed as a massive cloud hanging over, and input costs being a very big issue, and lower steel prices over this period really impacted the numbers that I alluded to earlier.
Yeah, certainly, and I promise every quarter it's going to be better, so I hope it is turning for them. But they had a lot of other production problems as well. At Newcastle they had a problem. I think it's going to cost them about 1.2 billion in sales. They had problems at Saldanha as well at this time around in this quarter as well. I think the Newcastle one will continue for the next quarter, so that's not going to be a quick fix on that side. So very much of headwinds for them going forward. We would have hoped that the currency would have played along for them, but now they have other headwinds going forward. The positive side is iron ore prices are coming off slightly, so that's a bit of a positive for them. But certainly from a management point of view and from a production point of view, certainly a lot of headwinds. We also know steel prices worldwide has been very flat over the last year, although in our currency looking okay. We've had an increase about 20% from the beginning of the year, but that's about how much the currency weakened. And then if you don't have global growth of about 3% plus, you're not seeing more demand for steel, so very difficult area for steel makers at the moment. Okay, well, the only positive that I heard there was the fact that iron ore prices have actually come off quite significantly, but high electricity costs, raw material costs and weaker sales pushing ArcelorMittal to the position that it's in right now. Are you convinced that the next 3 months could look far better?
Look, I think it's if you ask me to call what's going to happen in the next week, it's going to be difficult. So I'd be hesitant to call what's going to happen in the
Do you own ArcelorMittal?
No, we don't.
I remember that at a stage you did.
At a stage we did, but we don't currently hold the stock. I think if to put these results in perspective, you need to look at ArcelorMittal Group results, and those came out earlier this morning, and those were also down quite substantially. So in relation to that, these look fairly in line. The key difficulties, in my sense, is that you've got, firstly, steel demand that's tampered off over the last 9 months, input costs that are rising, but over and above that, you've got production difficulties. So, yeah, very few positives to take out of these sets of numbers. And even though management's outlook over the next 3 months is bullish, I'd have a wait and see approach.
So quite a bit of negativity that's surrounding this company, but another positive that I found, demand in sub-Saharan Africa has been moderate. Strong growth, though, the company says, in Zambia and in the likes of Kenya and Zimbabwe because on the back of increased construction. Do you think that's the next big focus for ArcelorMittal?
Yeah, look, I don't know how big that will be for them going forward, but certainly there's a shortage as well at the moment in South Africa. Yeah. So I don't think you can deliver to those markets at the moment that if you don't have any steel. They actually imported some of the steel as well to actually supply some of their local customers at the moment. So very difficult, especially on the short-term basis of what the effects would be. So.
Some have actually said before that it's actually cheaper sometimes to import as opposed to produce locally. It'll be interesting to see what the actual numbers.
Yeah, I think with the currency weakening, etc., they're probably not making much on the imports as well, but they need to at least supply their customers with their production problems at the moment. So I don't think there's much of a profit in that, but it's a long-term, probably sustainable business to actually supply your customers and actually import for them.
The Sishen contract, we sound like broken records at this point. I mean, is that basically done and dusted, that ArcelorMittal needs to move on from there?
Not quite yet. I think there's a big litigation process that's still underway. So that's another, I guess, negative.
But what are the chances that things could turn around, though?
Look, but the chances that it gets sorted out in the short term are probably very low. I have no idea in terms of which direction that's going to go. So it would be difficult for me to speculate in terms of the likelihood of them winning or losing. They have changed their sides from where they were arguing before.
Yeah. The CEO, Nonkululeko Nyembezi-Hayter, of course, has been dealt a lot of challenges that she's need to be able to deal with. What is your sense in terms of how the company is being managed at this point?
Yeah,
I know it's a tough question. I could divert that to Tshepo if you like. Because
yeah, look, I think it was very disappointing over the last 2 years with everything that actually went wrong with the company. So it's very difficult to say what actually went wrong, whose fault is it, etc. But from a shareholder point of view, it is very disappointing of what happened over the last 24 months on that side. What's going to happen in court, we don't know. But on the other side, if they can do, or they do win that court case and they can get back to cost plus 3, they're the second lowest steel producer then in the world. So then they got back their competitive advantage, etc. And that's why they've thrived all the years with probably not the greatest cost-cutting exercises within their company and so forth. And I think they're probably lacking a bit of skills on that side. And that's probably where they need to work probably a bit harder on, because if you have a competitive advantage and you can get iron ore at 60% less than what your competitors are paying, you're probably not looking too closely at managing your costs.
Hot or not for you then, Gerbrand?
At the moment, not at all.
66 Rand 54 cents. Hot or not? Where did you buy and where did you sell? And would you buy now?
Look,
what was your entry on ArcelorMittal?
This is a particularly painful one for us. So we held the position before the session debacle and sold.
I'm sure there are a lot of viewers out there that feel your pain. So please tell us your story.
So no, this is one that has been particularly painful for us from an.
Where did you sell? At what level?
We sold in the 60s. So yeah. It was a painful journey for us, so the position hurt quite a bit. But I think if you look at this is probably one of the stocks that you'd think would be classically ones that we would actually look at. So if you look at through the cycle valuations, it's trading at a Gerbrand PE of 8.9, which is actually pretty attractive. Yeah. Our key concern is in this type of environment, what you're looking for is quality. Quality in terms of management, quality in terms of balance sheet, quality in terms of the strength of decision making as a whole, and on that basis, it's not hot right now.
Okay, thank you so much for that. The fun part of the show, your hot stock picks, and Gerbrand Smit's hot stock pick is Mete. Tell us why.
Yeah, look, it's a company trading 2.5 billion rand market capitalization. They got about 300 million rand on cash on the balance sheet at the moment. So they got property, if you value it correctly, they value it at the moment at about 200 million rand. It's probably worth about 600 or 700 million rand. So about 40% of the company you got with no debt on the balance sheet long-term wise as well. You got already covered just in cash and property. And then the whole business is trading at a PE of 7.5 at the moment and a dividend yield of about 4. Look, it is a bit cyclical, so there is negativity in cyclical times, especially on automobile sales, etc. But I think these guys' business model is correctly positioned and probably not going to feel the negative effect so big next time around. So on a normalized earnings basis, it's probably on a bit of a high stance at the moment. Yeah. But I think margin of safety, PE of 7, dividend of yield of 4, and a lot of cash and a nice balance sheet. You can probably accumulate at 16.50 Rand on the share.
Fantastic. So there you have it. Gerbrand Smit's hot stock pick is Mete. Tshepo Modiba's hot stock pick, however, is BMW. Disclose what car you drive.
Not quite, actually. I drive a French car. I won't say which. BMW, I think this goes with our thesis in terms of our offshore investment case, in that we're looking for really attractively priced developed market counters that actually do quite a bit of business in the fast-growing parts of the world. So BMW is a case in point, trading at a PE of 7.4, even though it's got a return on equity profile of 18, and has actually doubled earnings over the last year. So it's doubled earnings over the last year, still trading at a PE of 7, and it actually has some really, really nice bits in terms of parts of it that are growing quickly. Rolls-Royce sales so far this year up 40%, believe it or not. What recession? Growth coming out of China up 40% as well year on year. So from our perspective, this is one that has fast growth and trading.
How would you get exposure to this as a retail investor?
You can invest via Canon. That's a good way of doing it. But again, this is one where you're probably looking to get some sort of offshore allowance and invest in directly.
Mete, do you find Mete hot?
Mete is extremely hot.
Hot, extremely hot. BMW hot for you, are you convinced?
Yeah, certainly.